I just look at one foot in front of the other. I took it one step at a time. And I think when you think that way, there's almost nothing you can't accomplish.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Chris Costa here on the show. Chris, welcome.
Thank you, Neil.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Chris Costa. I'm the president and CEO of Knapp Properties. We're a full-service real estate company based in West Des Moines. Really, 99% of what we do is in central Iowa. And by full service, to me, means we're brokers, developers. We own and manage various types of real estate: commercial, residential, industrial, retail. So we dabble in a lot of things. Founded by Bill Knapp, who unfortunately passed a few months ago, but he, as many might know, started Iowa Realty in the 50s. In the early 90s, he ended up divesting of Iowa Realty and with his real estate assets started Knapp Properties. And from there, we've grown into like I said, a full service real estate company with lots of great partners that help keep the portfolio expanding.
I want to dive deeper into Knapp and what you guys are Knapp Properties and what you guys are doing today. Take me back to you personally. Where'd you grow up?
I was born in Dubuque, moved to Des Moines when I was 8. My dad worked for the state, and at the time, you're 8 years old and don't want to leave home, but ended up being a great opportunity for me and our family moving to a bigger city, having more opportunities. I was a Hoover High School kid, and once I graduated high school, I went to the University of Iowa, and I think so much choice of university at the time was based on your sports affiliation. And sure, I was a Hawkeye, my brother got me excited about Hawkeye sports when I was a little guy. Yeah. So I ended up going to the University of Iowa, got an accounting degree, interviewed all over the country, thought, man, this is my chance to go to San Diego, Minneapolis, Chicago, and ultimately decided to come back home. My family was here. My mom and dad were still alive at the time. So I went to work for Deloitte Touche, which one of the big 8 accounting firms at the time, and spent 6 years there in various functions of public accounting, audit, tax, consulting. I was a year as a national franchising expert. I worked below the guy that ran the operation. So got a lot of experience and helped me kind of formulate an understanding of good businesses versus not so well run businesses. And that was invaluable to me at the time. It really helped kind of drive me to which fields I wanted to pursue after public accounting.
What did you learn most about the management of people in that experience?
I've had so many positive and not so positive experiences. And just going back to the public accounting days, there were people I would consider mentors that I took a lot of great things from. My ability to write a decent email or memo or document, I can almost trace back to one person I worked for who, when you're in public accounting, people always reviewing your work. And I was a snot-nosed kid, first or second year. And man, he just bloody up these documents I wrote, and it forced me to get better. And I look back at that and I say, I don't know I'm the same type of professional at this point had I not had that opportunity. So you take the good stuff. And then certain businesses, we would audit and you'd see leadership was micromanaging their people. To this day, I think my people would say I'm exactly opposite of a micromanager. If I've hired you and and I've built trust with you, which I have with my leadership team, mostly hands off. I mean, you get to do your position. Again, I don't get to this point of understanding if I don't get to see all those different perspectives in public accounting. In that job, you work on 30, 40 different clients a year. So you get a lot of perspective.
Tremendous perspective. Okay. So you leave there and what's next?
I grew up with one of the Knapps. John Knapp was one of my best friends, and his dad was Paul. Paul was Bill's brother.
Yeah.
And we played sports together. We were baseball teammates and different sports. And when I was still in public accounting, Paul was going to start a home building company with John responsible for it. And they needed somebody with financial experience. Paul reached out and felt like a pretty good opportunity. So we did that for 4 or 5 years, built spec homes, mostly some custom. But at the end of the day, nobody really had that passion for home building. So we were moving on, and I was looking for different opportunity. Knapp Properties wanted to talk to me about coming to work there. And I did talk to them, and it wasn't the position that I was looking for. So I went to work for a auto parts distributor that was regional, based out on the east side of Des Moines. Great opportunity. Went as their CFO, growing company. And about week 4 at that place, Bill Knapp II, who was Bill Knapp's nephew, Paul's son, reaches out from Knapp Properties and says, "Hey, we'd like to take another shot at you." So I met with him again, and things had changed a little bit, and I got the position that I wanted at the time. So this is 1997. The unfortunate part, I bailed on that other position after about 10 weeks, which, wasn't awesome. But the owner of the company, he knew the Knapps, knew it was a pretty good opportunity for me. And here 28 years later, 29 years later, it certainly has been a great opportunity for me.
The role you started with there, what was that?
I was controller. Interesting timing was Knapp Properties enter into a real estate investment with a publicly traded company. And Knapp Properties didn't really have the expertise to goof with GAAP. They didn't have anybody on staff really with that kind of expertise. So that's why they came back at a second shot. It's just they had a hole to fill. And while accounting is great background, I'd tell anybody that wants to do it, it would be time well spent. It wasn't my passion. I was more operationally focused. So after about 3 or 4 years, I'd been given the opportunity to kind of prove myself. And Jerry Nugent was our CEO, and he thankfully gave me a lot more opportunities on the operational side of things. So that's kind of took off from there.
What was your first taste of the operational side?
It's a very good question. More from the perspective of analyzing and determining path forward on different opportunities. And by that, I mean, early 2000s, we had the Y2K stuff where everybody was worried about real estate and why, you had the dot-com bust, but we were looking around and saying, why isn't all of our investable dollars going in the stock market? These returns are ridiculous. But we stayed the course, and we had some multifamily properties at the time, and everybody wanted our multifamily properties. So we took a look at what it would mean to divest ourselves. Somebody made an offer on a bunch of the properties. And after analyzing that, we went back to them and said, "Hey, you've got a good idea here. How about we buy your properties? We'll keep ours." And we couldn't work out the deal at the time. But that was my first foray into the strategic planning part of it, and a seat at the kind of the big kids table where my opinion meant a lot more than I thought it probably should have at the time, but was doing something right, I guess.
It sounds like a lot of asset allocation decisions or planning.
Yeah, I'd say early on, that was definitely a lot of it. It morphed into opportunities to make decisions on transactions. And that happened naturally as I kind of assimilated into my current role. We're essentially a family office. And there's a lot of dynamics kind of to understand as it relates to that. We have beneficiaries to worry about. We have principal capital preservation to worry about. And each transaction almost stands on its own, and you build up that experience over time, not making all the decisions early on. And then later when you're tasked with those, drawing on that experience. I had great mentors in Knapp Properties, Jerry Nugent, Bill Knapp II, and especially Bill. Every once in a while, Bill had a lot of euphemisms that we could go through, but few things that came up during my tenure that to this day, I'm just unbelievable to me. Bill built his empire on farmland. Nobody knew potential value in farmland better than Bill. He'd buy hundreds, thousands of acres that ended up being in the path of development. We didn't always develop it. A lot of times we just sell the land once the kind of the value was created because it was in the path. But it was about 2006, 2007. He comes into a meeting I'm having with CFO, and he says, I want all our transactions, any sales, straight to cash and investments. And he gave us a number like 50, 60 million. And I'm thinking to myself, that's not what real estate companies do. I mean, I almost flinched a little bit saying he's joking. And he says, I don't know what it is. We just completed a sale at a price that makes absolutely no sense to me. Something is going to happen with this economy. He certainly didn't know we were entering the Great Recession, but he just knew from his experience that things were not normal. Right. And I look back at stuff like that. You can't replicate experience.
No, that's right.
And you got to take those opportunities and use it to your benefit at some point in your career. So that really sticks out to me. There's many times where Bill would come into a meeting and say, hey, I've identified this 200 acres in Altoona. And we'd push back. No, Bill, we'd say, we're not sure. He'd go, Bill did what he wanted to do. Sometimes he just wanted reassurance and he didn't get it, but he still did it. And this particular parcel, I remember we encouraged him not to do it. He did it. And while it's still in due diligence, he'd already resold it for about a 25% increase over what he paid. And you reflect back on stuff like that. Again, we can run the numbers, pro formas, look at comps, but Bill had gut. He had gut feelings about stuff like this. So being able to have a front row seat for experience like that has really been valuable to me.
You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises, stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you. Has there been any time in your career since then where you had that gut feeling that things were off in the market environment?
Well, that's interesting. We're a very conservative group by nature. And I would say my management style is I manage in the gray. Somebody told me that's a thing at some point. I'm not black and white. I want to get into a situation. I don't need all the information going in, but I need the ability to be able to ask the right questions to kind of satisfy myself. But maybe some of the best deals we've done are the ones that we didn't do, or maybe some of the best things that we did were deals we didn't do. Yeah. And I can think of a few office buildings. Office hasn't been the greatest. Right. And, COVID really did kind of flip things upside down. But there's a few deals we didn't do in 17, 18 that I look back and say, thank God, they were pretty big bites, whether that was gut feeling or not. I feel pretty good about not owning 600,000 feet of office in certain areas of West Des Moines.
No doubt. What about your exposure to multifamily? Did that ever creep in at all? There was a time period where multifamily has had some historic value increases.
Yeah.
I'm wondering what's encapsulated in the portfolio today? You still have exposure to multifamily, and you sold some stuff over the years?
We have exposure. It's not enough. Interestingly, we had some decent holdings about mid 2000, so 2005, I'd say, or 4. And we owned 1776 Westlakes, which was the old KVI headquarters.
Sure.
KVI gets bought out by Marsh McLennan.
Yeah.
KVI loved that building because it was the gold standard for office at the time. Gary Kirk designed it. It was a beautiful place. Marsh McLennan comes in. They're like, it's a commodity to us. And we're looking at a renewal, and somebody comes along and wants to buy the building. We're like, okay. Value was more than we thought we could get in the open market. We consummate the deal. We take a note back for downstroke. Fast forward about a year, we're negotiating with Marsh McLennan on the behalf of this California owner. And like I said, Marsh thought it was a commodity. Maybe KVI was paying $18 a foot at the time, and the renewal was that or above. Marsh says, well, we're not doing the renewal, but we'll pay, I don't even remember what the number was, $9 a foot. Wow. And they're like, that's our number. You can negotiate all you want, but we don't care how nice it is. We just want office space. And this owner says to us, so the building I bought from you is worth half of what I paid. Well, if that's the market rent, that's what we're telling you. And in that situation, it looked like he was going to bleed the current lease dry and give the building back to us. So we had to make a deal. We had to give him all of our apartment units at the time in order to get this building back. And it wasn't great timing because apartment values really took off after that point.
Right.
There were some downtimes, obviously, during the Great Recession. There's a lot of giveaways and strategies that you had to employ to keep tenants in there. So that was the unfortunate part of our multifamily experience. And then we've slowly tried to acquire. Back in the day, we could buy apartments all day long for a 10% return.
Right.
And we'd look at a deal and say, if it isn't a 10% return, we're not going to do it. And as Des Moines has grown and got more popular on the national real estate map, we aren't competing against local buyers anymore. So it's a lot harder for us to purchase units and get the return as a family office that we need. So it's more likely that we'll develop and build on land that we already own. Those economics still work for us. We don't do a ton of it, but we do some of it. We've got Hy-Vee as a partner in the 4th and Court project downtown. That's a project we developed and did one in Pleasant Hill. But we're pretty opportunistic as it relates to that. We love multifamily. It's tough to get a return based on the profile we need.
What intrigues you? What do you enjoy about multifamily? I'm wondering, to take it further, is how much is inflation a factor in your decision to your choice to like multifamily over, call it a long-term fixed rent with rent schedules in place for the next 15 years?
Well, what I like about multifamily is if I'm looking at the legs of an investment, 3 legs of a tripod, whatever, it's one of those legs that maybe when commercial and office isn't performing as well, multifamily can prop you up. So I look at more of as a strategy to ensure that we have the different areas of real estate investment covered. Development would be the other big leg for us, but we do look at how you allocate capital. Becomes
back to the asset allocation component where we were started with.
It always becomes part of the issue. And we look at strategies where how good is our tenant going to be and what is the risk associated with that. And we like multifamily because the risk is really relies on the market in general. It's not specific to a few tenants here and there. But there's some single tenant buildings where, if you haven't evaluated the risk properly, you could really be taking a hit. Like I said, we're pretty thorough when we secure tenants, but it happens to the best of us. So I just like to spread the risk.
Talk to me about the development side. I'm curious as to the percentage of the portfolio today. What percentage do you actually develop, and what did you acquire in the open market?
Where we develop is typically land that Bill purchased over the years. I think when I started in 97, we had an inventory over 5,000 farm acres. And I think we're probably a little over 2,000 still. Some we've sold off. We've made some data center deals that you just couldn't walk away from because the values were so much higher than what we'd anticipated, but have a hard time putting a percentage. But where where we're most likely to go vertical is on land that we own.
Sure.
And that model has worked really well for us over the years. We have some partnerships. Farm Bureau is a partner. Jim County is a partner. We have some great partnerships where we have land for future development in those. And I'd say we aren't typically looking to go vertical unless the opportunity is there for us. We're more likely to put in the infrastructure and try to sell lots. But out on Hickman, for example, we put some strips retail because it made a lot of sense. We had great daily traffic out there and rents for those retail tenants. And that's really the one sector I think has been really good over the last, 5-6 years since COVID. Is retail has been real good in the right places. But the last office building we built, I think, was 2018. That particular user wanted to expand the premises about a year ago, and prices were not quite double, but dang close.
Yeah.
And the formula just didn't work for them. There's too many existing vacant office buildings that you can redevelop at a lower price.
How do you give thought to acquiring additional ground, knowing that that's what built this company from the beginning? And 2,000 sounds like a lot, but I'm sure it ebbs and flows. In the cycle. So how do you give thought to what that looks like, and how do you go to replace, Bill Knapp?
Yeah,
I mean, nobody knew the ground better.
We look at replacing and purchasing land really in two different buckets. The land that you're going to pay near top dollar for, that you've got to develop and sell as quick as possible to get any kind of return, or the opportunity to be a little further out in the path of development and just sit and hold for a while. We do a lot of the latter and very little of the former, because we have land available to us for really any type of use that we would want to go vertical on in our portfolio currently. So we're not looking to add that kind of land, but there is a rather large portfolio out there now. Lamar Kofi, who passed away, he owned almost 10,000 acres, and there's a lot of parcels available, and there's a lot of parcels that are in hopefully the path of development. That's the kind of stuff that intrigues us, is let's set ourselves up for 10, 15 years down the road. We're okay today, and we've got great parcels out along Grand Prairie Parkway in Waukee. I mean, that area is really taking off. We'll probably do some vertical stuff out there. It makes a lot of sense for us economically, but we'd like to obviously sell land to the right uses out there as well. Whenever we look at land strategies, it's those two buckets, and we're just likely to be patient.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
What keeps you up at night?
I'd say people, because we have a phenomenal team, and it isn't just my leadership group. We're about 100 strong. We have longevity in our employees. We take great care of them. That Bill started it, and we've just carried it on. Philosophically, like, I'm completely on board with that. Our benefit packages are great. Our salaries must be competitive. We're not losing people based on that. But as our workforce ages, replacing those people isn't as easy as it once was. We've got great work ethic. My leadership team, I trust them implicitly. Those dominoes start falling, then that really would start to concern me. So, I'm sure from a real estate perspective, that's more what you're concerned about. But what worries me the most is just where the cost side of things is going. Infrastructure.
I was going to ask, cost of people or cost of construction? Because both have been material.
Cost of people we've been able to deal with. And then cost of construction, you got really a few components there. I'll tell any city that'll listen, that the number one thing you can do for us development-wise is provide infrastructure. Make our lives easy by having sewer and water available, and that will encourage us to develop quicker in your community. These sewer costs are just going through the roof. We pay in West Des Moines, one area, we're about $9,500 an acre for sewer connection fee. And I talk with the city. I go through their calculations. I get it. I don't love it, but I get it. And that makes it hard for them to invest in infrastructure projects when it's several million versus one or two. And you've got this issue of property tax legislation that will hopefully see some movement in this legislative session. But I look at that from all sides, and I get heavily involved in those conversations when I can. But we're a real estate company, and we pay a lot of taxes. We also demand a lot of services. We want cities to be flush with cash because we need them on infrastructure. And there's certain opportunities come along that we can't follow through with. We don't have some incentive, particular tax increment financing, which would just really blow up development in central Iowa, especially, but certainly statewide. Property tax legislation is something that has been challenging for the cities for the last couple of years. I'm not sure. We've heard a proposal up on the Hill this year that is giving anybody great comfort. Hopefully something gets fleshed out in the next few months. As it so happened, I'm the chair of the Greater Des Moines Partnership this year, and we have a policy council. So with that hat on, I would say that we just encourage opportunities for economic growth. My real estate hat would say, let's let the cities do their thing without restriction and let the voters weigh in if they're not happy. But traditionally, what you'll hear from residents is we like the amenities or we want more amenities. How do we keep those if you guys don't have the revenue stream to support it? So I like to say I see all sides of the issue, and I hope that common sense prevails and we all can come to the table. And hey, if none of us are happy, it's the best outcome.
That's probably it. You're right. Speaking of that, I'm wondering your take on farmers paying more when it comes to taxes, right? I mean, the tremendous percentage of the ground, right? The overwhelming bulk of the ground in Iowa is farm ground. And if you look at some surrounding states, certainly Nebraska comes to mind, they're paying materially more than what Iowa farmers pay.
Well, it's interesting. I heard that fact for the first time maybe 6 weeks ago. And it's intriguing. I get the argument, but I also know at the end of the day, as far as this state is concerned, there will not be a change to farmers' participation in the real estate tax problem.
I suspect the voters in the vast majority of counties would they would weigh in real quick on that one.
Yeah, exactly.
Yeah. 2026, what are you most excited about this year?
Boy, probably some residential land development projects we'll do. We have about 240 acres out in Waukee, and that market just continues to perform incredibly. We're going to deal with a school that'll go in our project, which, at the end of the day helps marketability of housing. So that stuff gets me excited. The challenge that you have to overcome is we've looked at this thing from 10 different angles on how to make the economics work to our satisfaction. And we're not there yet. And that is in a very unusual situation for us. It's rare that we can't get to the point where economics work, but we're really challenged on this one. And it's just infrastructure.
I was going to say there's two sides to that coin. It's either cost or sales. And so which ones? It sounds like the cost side is balanced.
And we feel that this will be a high velocity project and would price it that way, since you kind of start with the first 30, 40 acres and then get that sold out and move on to the next parcel. But it's the infrastructure. I mean, it's the external roads to the project, sewer and the other utilities. It's a real challenge.
Whenever I'm gonna foreshadow decades from now, when your time comes to a close at Knapp Properties, what do you want your mark to have been?
I want it to be that he had the ability to look at all sides of an issue and come to the best decision at the time. I think my people would say I'm fair, and I do the best I can to create opportunities for people to be engaged and challenged. That's something that during my career has always been important. If I don't think you as an employee are challenging yourself enough, I don't think you're going to grow, and I don't think you're going to do a good job. And I just give you an example. People can come to me and ask questions and get answers really easily. I mean, I've done so much in my past that our employees are now doing, but that doesn't help them. And it's the most frustrating thing when I say, well, if I were in your shoes, I would look here, there, wherever. But the best part of that experience is when they come back and say, you're right. I mean, it took me 25 minutes and I'm surprised I was able to come up with an answer we can all agree is the right path forward. So I like challenge people. I think they come away and hopefully they carry that to their subordinates at some point in the future. That would be if that somebody came back to me and said, because you forced me to do this, my team is better. That's the best compliment I could get.
The best leader the best mentor, whoever gave you a sense of that, what you just described, where did that come from? Who was that?
It's an amalgamation.
Yeah.
I mean, there's no one person that it's built on, but even people that I worked for who I thought were horrible leaders, if you take something from that experience,
No doubt.
it can make you a lot better in what you do. And I would say somewhere along the line, without naming names, I worked for a micromanager, and I saw how difficult and challenging that was as an employee to be excited about what you do and want to come into work. So I don't want to do that to people. So you take the 180 on that. And, but Jerry Nugent has given me great stuff. Obviously Bill Knapp has worked with the guy early at Deloitte Touche named Steve Weiss. I mean, it's an amalgamation. And I think the best leaders are able to take from their experiences and be their own person. They don't need to copy anybody.
Chris, ready for the final three questions. If you had one piece of advice for your 20-year-old self, what would it be?
It's so funny. It's advice that I've taken. Get to a place of yes. That sometimes it's so easy to look at your situation and say, I'm busy, I'm over capacity, but I have gotten myself heavily involved in the community. And some of the best things in my personal life have been a result of saying yes to an opportunity that at the time I'm like, oh. And one quick example, my daughter was 6 and she's a softball player, a little 6-year-old softball player. And somebody says, they asked me to coach. It's not really my thing. Would you mind coaching? I thought, man, I am so busy. How am I going to find time to coach these kids? Well, then I went on to coach for like 12, 14 years. And these are some of the best experiences I have. Some of these kids I coach still come back. And when I see them, they're grateful for the experience we had together. And more importantly, me and my daughter, we were inseparable because we spent so much time together. And, I could have easily said, I don't have time to do this. And getting to a place of yes, is, I think, so vital for people to experience something they otherwise wouldn't have.
Yeah, what's the old saying? Show me your calendar and I'll show you your priorities.
That's right.
2 books that changed your life.
2 books. The Long Walk, which is a book about a Polish infantryman who I think ends up in a Russian prison. And he escapes. And all he wants to do is get to his family. And in order to do that, he's got to walk from the hinterlands of northern Russia to civilization. And this is in World War II. And it just goes to show determination and what it means. One of the passages, he goes, I just look at it 1 foot in front of the other. I took it 1 step at a time. And I think when you think that way, there's almost nothing you can't accomplish. And then Rick Pitino wrote a book about coaching and success. In the one passage, I can't remember the name of the book, that to this day I love the most. He says, you prepare to the point that you deserve to win. I thought that is a really great mindset. If you think you've outworked everybody else, that instills a level of confidence that you don't trip upon. It's ingrained in what you do and who you are.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. what 3 things must you know every month to know how your business is run?
Brokerage transactions, sales, and occupancy.
Of course, I've asked lots of questions here today, and I appreciate your time. You've been very generous with it. What's one question I did not ask that I should have asked?
The importance of community involvement. And what I would say on why I think that's important is you get long in the tooth and you have these experiences from life. I mean, I've had heart troubles. I've overcome a lot of health things specifically that then make me passionate about giving back to the American Heart Association or American Cancer Society. Above and Beyond Cancer is a group I'm affiliated with. Affiliated with Central Iowa Community Land Trust, which is a new organization for affordable housing. All these experiences and get to the point where you find a few things that you're passionate about that you can help the community be a better place. And at the end of the day, a lot of times I ask myself, have I done enough? It isn't. I have my job during the day and I've got to perform there, but I just don't think our contributions to the community end there.
Chris, I appreciate you taking the time. For people that want to find you, follow you, connect with you, where can they go? What should they do?
Well, knappproperties.com is our website. I'm on LinkedIn and probably find me on Twitter, but I don't really tweet that much, but I'm easy to find.
Perfect. We'll stick the links below in the show notes. I appreciate you being here.
Thanks for having me.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? Does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.